Thank you very much. My name is Marz Kord. I'm the president and CEO of Wallbridge Mining. I'll be making some forward-looking statements, so just make sure that you check our website for these cautionary statements. So Wallbridge has always been known for its copper-nickel PGM exploration in Sudbury, and I think since 2011, 2012, and that's where I joined the company as well. The company decided to transition itself from being just a pure explorer to a producer with exploration assets. Of course, exploration is in our DNA, and we'll continue to do that. So in order for a junior company trying to get into production, obviously we needed to demonstrate to ourselves and to our investors that we could deliver. So, and also be able to talk to some of the companies about their non-core assets. So we looked inside, and we had a project called Broken Hammer in Sudbury. So between 2014 and 15, we operated that Broken Hammer project. It was a copper-nickel PGM, small open pit. Around 2014 and 15, junior companies had a hell of a time raising money, and we managed to actually generate about $5 million, about free cash flow. But more importantly, it gave us the experience that we needed, that we demonstrated we could do that safely and as well as profitably. So in 2015, we assembled an M&A team to look at a lot of projects around and talk to other companies about their non-core assets. Up to date, we probably have reviewed over 175 projects, and we generally, about 95% of those, we didn't get past the public information that was available and didn't fit our category of acquisitions. We were looking for things that were a year to 3 years from production, be scalable, and be in good jurisdictions, and more importantly, have a high margin. I mean, we were looking at actually an NPV to CapEx ratio of more than 1, meaning that if we put $50 million in, we want to get that 50 back plus another 50. So a lot of these projects weren't available. However, we actually managed to luck out on a few, and one of them happened to be Fenelon Gold, that we picked it up for $3.5 million cash and about $200,000 worth of our shares in 2016. And that was basically where our share price was around 4.5 cents and our market cap was close to $5 million. So we managed to pull the rabbit out of our hat, and we raised the money and started working on Fenelon. Fenelon was a high-grade deposit near Quebec, and it's actually to the east of the Detour Gold project on the Sunday Lake Break. What it had, it was in the right jurisdiction. It was in a camp that was really hadn't seen a whole lot of exploration, but through the due diligence, we saw a lot of potential. It already had an infrastructure in place. There's a road to the site. That there was a ramp that a bulk sample was done back in 2004 from the upper 30 meters of the deposit. There was a shop, a camp available that we upgraded to date. So since then, I'll be going through the Fenelon more importantly, but we also have acquired another project which is about 30 kilometers from that this past October. It's from Exelon, which is the Bechefer project. But we've really rapidly developed this project because we obviously don't believe in picking up properties and sitting on them. So before the acquisition was even completed, we did an NI 43-101 resource just to make ourselves comfortable with the fact that this project is robust. Initial resource actually had close to 20 grams a ton, but we realized that it was based on a 1.5 meter mining width, which as a mining engineer who's operated a lot of mines, didn't believe that that was the case. So we actually made a 2.5 meter mining width when we came up with a resource of close to about 13 grams a ton in the top 100 meters of the deposit. But more importantly for us was trying to ensure that these high-grade, narrow vein type deposits are continued and we can actually mine those profitably. So our board and ourselves decided that the best for us is to do a bulk sample. So in 2018, we started dewatering the underground, and we've started a 35,000 ton bulk sample. We expect the bulk sample to be completed by the end of this February, by the end of next month. It's about 35,000 tons of average about between 18 and 25 grams a ton, but we believe that it's going to be about 20 to 22 grams a ton. We've had so far the 3 mill runs, and most of the mill runs have run more than 97% recovery. In fact, our average recovery is over 96%. And but more importantly is some of the stuff that we did through the due diligence. We realized the continuity of these to depth and along strike. Some of the results that we did from the drilling in 2018 was about 140 grams over 7 meters. Another 260 over 7, 311 over 3.06. And these are the kind of grades you don't normally see in the Abitibi. but we were, most of this deposit was found through perhaps coincidence when they were looking for VMS. There really hasn't been a lot of exploration since the 1990s. It's not typical of Abitibi, when in the Timmins camp you could kick the moss and be able to find gold. Here you got 30 to 50 meters of overbred, and it's really been since the geophysics had been developed in the late 90s that they actually found some of the gold in this camp. So our bulk sample not only consisted of the 35,000 tons, but more importantly, we've been doing some drilling. We've probably drilled about 17,000 meters in 2018. And these are some of the highlight drilling. In fact, we've picked the better highlights of those drilling, but there is a lot of other triple-digit grades in this bulk sample that we've done. And once we complete the bulk sample at the end of February, we'll continue to do the underground drilling as well as surface drilling. And we're hoping that we'd be able to demonstrate its potential not only along strike but to depth. Initially, when we purchased the property, we were looking at about 300 ounces per vertical meter. To date, we're comfortable with at least being over 1,000 ounces per vertical meter. We just have to show demonstrate the continuity of it to depth. Just an example, the reason we did the bulk sample is trying to understand these 137 grams or 72 grams over a few meters to actually continue. This is a drift that we did in the bulk sample. You can see that pretty well over a 15 to 20 meter strike length, those continue. So what we've been working on and concentrating in 2018 really has been, if you see the bottom of this slide, there's a 4-kilometer strike length of that structure along the property, and we've really looked at that postage stamp in the middle, as you can see, is zoomed up in the top. The last drilling that we did before we left, we moved the drill for our 2018 program was in December, and we actually hit VG in 2 holes out of the 5 surface deep holes. So this is the deepest hole we've done so far at 350 meters, and we're quite excited about the fact that this continues at length. This is some of the drilling on surface. We get excited when we actually see a meter of some high grades, or even a half a meter, or maybe 10 meters of some lower grade, because we do see the structures continue. A good example was this is the drilling that was done pre-Wallbridge in this zone. There was a hole at 34 centimeters of some double-digit grades, and the rest of the holes were actually showing no mineralization. However, when we followed the structures along the way, we managed in this particular zone probably have about 25 to 30,000 ounces, and this is only a 50 by 30 meter area. On a blue sky potential, we've actually compared ourselves to the same scale to the Island Gold project. If you notice, Richmond actually started in 2004 with a small resource near surface. And until they were purchased by Alamos last year, they actually had mined over 600,000 ounces, and they had over 2 million ounces in their resource. And that's basically sort of the model that we believe that it's analogous to Fenelon. Last October, we also picked up Bechefer project from Exelon. This project was not their core asset. They're concentrating on their high-grade silver in Mexico. It did have some 55 grams over 5 meter true width and another 13 gram over 9 meter true width. So it's 30 kilometers from Fenelon. It basically fits within our model of, in 3 years, we want to be a plus 60,000 ounce producer, in 5 years, plus 100,000 ounce producer. And these are complementary assets. We're trying to still review some of the other companies' properties along the camp in order to consolidate more assets to meet those goals. This is just another view of Fenelon. It's a Bechefer, which is a bit different than Fenelon. It's not on echelon veins. It's actually a structure that continues down to 500 meters. We do have, notwithstanding all of our gold assets, we also have the copper-nickel PGM exploration assets in Sudbury, some of the advanced projects. In fact, we have a joint venture on one of our properties called Parkin, where Lonmin PLC has to spend $11 million to earn 50% of that project. We are in the process of trying to rationalize some of our copper-nickel PGM assets. We understand there's 2 different types of investors for gold and copper-nickel PGM. We expect 2019 would be a year that we probably be able to give our shareholders the choice in either of the 2 or both. So we have a solid company. We've demonstrated that we can bring projects to production. We've had a history of monetizing our assets by being able to spin out some of these companies. Our Minnesota properties was spun out into Duluth. Duluth later on went on its own and actually sold for $96 million to Antofagasta. We actually generated $500,000 to $10 million within the company, but our shareholders got a dividend for a company that was worth at the 20 cents, they had a $1 dividend. So we continue to do that as well. Our catalyst is we'll continue to provide the update on the exploration this year. We have a 75,000 meter drill program planned for this year, just on Fenelon, not including the Bechefer. The results of the Bechefer drilling will come out at the end of this month, and we'll have our plan as to what we plan to do in the Bechefer drilling. We'll have continued updates. In 2018, I believe we had every 2 to 3 weeks updates on our exploration drilling. We'll continue to do that in 2019. And we're also looking at other acquisitions to add to the portfolio projects. Our shareholdings, we have about 400 million shares outstanding, and Eric Sprott is our largest shareholder. William Day, who was a construction company in Sudbury that did the Broken Hammer, liked our business model, wanted to be our shareholder. They're our second largest shareholder, and as you can see in here, that we believe that we're undervalued as of today, and there's a lot of news coming out this in 2019, and we'll look forward to providing those deliverables. Thank you.